Welcome! In this video, we'll show you how to trade options on Wall Street Survivor. An option is a contract giving you the right, but not the obligation, to buy or sell a stock at a fixed price, known as the strike price, before a set expiration date. Think of options as a versatile toolkit for your portfolio. They allow you to hedge, which acts like an insurance policy to protect you if a stock's price drops. Lock in a price, which works like a reservation, letting you secure a price today to buy or sell later. Generate income, which is like collecting rent on your stocks, allowing you to earn cash even when the market is standing still. There are two main types of options, calls and puts. A call option gives you the right to buy the underlying stock at the strike price. It's a bullish strategy. If you expect a stock's price to rise, buying a call allows you to lock in a lower purchase price or sell the contract itself for a profit as its value increases. A put option gives you the right to sell the underlying stock at the strike price. This acts like an insurance policy. If you expect a price drop, a put allows you to sell your shares at the strike price, regardless of how far the market price falls. The premium is just the market price of the option contract. It's influenced by the underlying stock price, time remaining until expiration, and market volatility. The buyer pays this premium to the seller or writer. Use buy to open when you want to own a contract. Use sell to close when you're ready to exit that position and realize your profit or loss. Both actions allow you to trade based on your outlook for the underlying stock's direction. If you're bullish, meaning you expect the stock to rise, buying a call allows you to control more shares with less upfront cash than buying the stock outright. If you're bearish, expecting the price to fall, buying a put allows you to profit from that decline, turning a market downturn into an opportunity. You can also sell to open or write an option. In this scenario, you act as the seller and collect the premium up front. Investors do this to generate immediate income, essentially betting that the option will expire worthless so they can keep the fee. However, you take on a legal obligation to the buyer. If they choose to exercise the option, you must fulfill the trade at the agreed price. To cancel this obligation before the expiration date, buy to close, to exit the position. Moneyness describes the relationship between the strike price and the current market price. A call is in the money if the market price is above the strike price, allowing you to buy the stock for less than its current value. A put is in the money if the market price is below the strike price, allowing you to sell for more than its current value. Out of the money means the stock moved in the opposite direction of your trade. These contracts have no intrinsic value, and you could let them expire worthless. Exercising an option is when the holder chooses to fulfill the contract's right to buy or sell the shares. You don't have to wait until the expiration date to finish your trade. If your option has gained value, you can sell the contract back to the market to lock in your profit. This allows you to benefit from the price movement without actually buying and selling the hundreds of shares of stock involved. Wall Street Survivor does not automatically exercise contracts. At expiration, the platform sells your contract at the last traded price and adds the proceeds to your virtual portfolio. To make an options trade, go to the Stock Game tab and select Options. You can choose between a simple trade or a spread. Select Buy to open to start a new position. Remember, each contract represents 100 shares. To control 500 shares, enter a quantity of 5. Enter your ticker symbol and select whether you want a call or a put. Next, choose your expiration date and strike price from the available drop-down menus. Options require liquidity. If a specific contract has no trading volume in the real world, your order may not fill on the simulator. Choosing an expiration date closer to the current date typically ensures higher trading activity. You can also choose a strike price near the current market price, known as at the money, to get the most volume. Click Preview to view the payoff diagram. This visual map shows your profit and loss potential at various price points. Add your trade notes and click Confirm to execute. When you buy options, you pay the full price up front with cash. Because you aren't borrowing anything, there is no margin requirement. However, when you write, sell an option, you are taking on a potential future debt. To cover this, the broker requires margin. Think of this as a security deposit. It is a portion of cash or stocks held in your account as collateral to prove you can fulfill your obligation if the trade goes against you. If you write a naked option, meaning you don't own the underlying stock, the risk is much higher. Consequently, the broker will require a significant cash deposit to stay in your account. But if you sell a covered option using stocks you already own, your margin requirement is usually zero. In this case, your shares act as the guarantee, so you don't need to set aside extra cash. To use multi-leg strategies, click the Spreads tab. After entering your ticker symbol, the platform will offer diagrams explaining each strategy based on what you select from the drop-down menu. For example, with the covered call, you sell a call option against shares you already own to generate extra income. This strategy is ideal if you expect the stock to remain steady or rise slightly, but stay below the strike price. Once you enter your quantity and expiration, the various legs of the spread will appear. Make sure your strike prices are consistent with the spread type. For example, a short condor call spread requires selecting prices in a specific ascending order. All spreads are executed as market orders. Trades placed after hours will be held until the next market open. If you have any questions, you can reach our help desk by clicking the icon next to your username. You can create a ticket that will receive updates directly to your inbox on Wall Street Survivor.